caused. They've really been the most disruptive force that I've ever seen in my lifetime. I've never seen anything like it. Pretty tough. I've had a 35-year career in real estate and I've loved every single minute of it. Last year this time, even though we thought it was bad, I think we had a certain degree of optimism that things would come back. We certainly didn't expect the level of correction from the trade war with the United States. We certainly didn't expect the amount of global turmoil that the United States has caused. They've really been the most disruptive force that I've ever seen in my lifetime. I've never seen anything like it. So I think globally that's having an impact. But the other thing that's out there that's much different than any environment I've seen even from the 90s is the amount of war and the turmoil that's caused. So very strange environment. Here at home in Canada, we've had a freeze of home sales like we've never seen. Condo market, frozen, inventory not selling, going off at fire sales if you can get it done. Affordability has never been worse for home ownership in terms of income to what you can buy. So the market is disrupted, but we have to keep things in mind. Real estate goes in cycles. So we're in a cycle that's building negatively. Right now in my business, we are completely revamping what we're doing. We're trying to reinvent ourselves. So we're gonna focus on income producing stuff. We're gonna focus on stuff that has a little bit more asset test to it. We still have investors that are interested. So there's actually lots of capital out there, both institutionally and privately. But investors are hoping to get higher returns for better quality stuff. I don't think that's actually available. I think there's higher returns for riskier stuff, and the better quality stuff is getting bid down really cheap because there's not a lot of trades going on, or there's no trades going on. So everything's refinance business and default business and development of small multis and other apartment buildings. That's been really key lately. If I was just a normal homeowner, prospective purchaser, this is a good time either to downsize or to buy your condo to start as a starter, because it's never going to be cheaper. Inevitably, if the supply gets absorbed, let's say it goes into default, if it gets absorbed by the lenders will wait and wait and wait until they can recover their money. But there will also be this group of people who want to liquidate fast. And that's what I think is going on right now. There's people that say, look, well, I don't want to wait. If this is going to last for the next 3 years, I want out now. And then there's the other group that'll say, I'll hang on for the next 3 years because I know things are going to improve. So I personally don't think you're going to see another new condo built probably for the next 5 years. There'll be some pockets in certain neighborhoods. Generally speaking, we're not going to have a condo boom for at least 5 or 6 years. Yes, we need housing. Yes, we need affordable housing. I think there's opportunities there to do affordable housing. We're leaning into that. But if you're a purchaser that's looking at, if you have the ability, if you're an investor, a larger investor, you have the ability to buy distressed properties, this is a good opportunity because the pricing of debt, even on income producing, has come up enough that some developers or builders have bought these properties at higher values, and now they got to de-lever. And that's a really difficult thing to do. So these opportunities are coming on the market. You're seeing them all over. Land, again, there's tons of land for sale. That is a longer play, especially if it's high rise. So again, super cheap. So I would propose, if anybody who's looking to get into real estate, this is the time to get into real estate. If you have cash sitting on the sidelines, now's the time to make an equity play. As far as lending goes, we have lots of investors. We're lending at the lowest values now. Our values are all adjusted. We just did a portfolio review of the mortgage fund. We cut the values by 30, 40%. Our LTVs are holding well. So as a portfolio, we're feeling happy. Now, would I like to see things trade more? Would I like to see more refinancing? Would I like to see more liquidity? Yes. Every lender would like to see that. Every mortgage fund would like to see that. That's another thing that's going on in the private credit world. There's just not a lot of liquidity. And we need investors to come in. We need everybody to come back and try to keep that market going, because there's lots of guys we can serve from a lender's point of view, the small multis, these small entrepreneurs. That's going to build a lot of really good affordable units, and we'd love to serve that. But there's only so much we can do if we don't have enough capital coming back into the system for that type of product. I think what's going to happen in real estate, we're going to go back to a more traditional market where you have the 4 dominant asset classes, one being rental, and then you'd have commercial, which is office, retail, and industrial. Those are all going to be traditional classes. They're going to go back to where they were in the sense of those are going to be the dominant things you invest in. It's going to be part of the basket. There's not going to be super specialization outside of that. They're going to continue to dominate. I think some purpose-built stuff like retirement homes, student res, those will also come back, because once the population numbers start to normalize again, Like right now we have a moratorium, which is further impacting our home values. Low-rise real estate will come back on subdivision level outside of major urban areas. So that will come back. So I think it won't be frothy, or at least my hope is it'll be balanced, because then that we'll have more consistent values, more consistent exit strategy, and at least some balanced liquidity. Right now, liquidity is spotty and it's very difficult. If you have a really good income producing property, low loan to value, you got lots of liquidity. But if you have a piece of land with zoning risk in distress, you might be sitting there forever. Someone may not even offer you $1. So it's pretty tough. I've had a 35-year career in real estate and I've loved every single minute of it. But this is one of my least favorite times. I'm in the sandwich between my investors and my borrowers, and everybody knows they're struggling. Between the lack of liquidity and the worry about getting repaid on loans, and sometimes the spottiness of collections of interest, and even though these guys might survive, there's a lot of patience required to get through these times. And honestly, it's just not a lot of fun. There will always be real estate. Will it be as hot and sexy as it was 5 years ago or 8 years ago? Probably it will be at some point, but for the near future, that's not the case. I think this is an environment where if you're highly professional, highly disciplined, you want to make a living, and you'll make a good living, but maybe not an above average living, and you're okay with that, yeah, it's a great place to be. But is it going to be a great place for big developers? Not so much. I think they'll be very patient. So we have a bit more long run to get through. I'm hoping that the low-rise market comes back first. And as soon as we see that happen, I think we're going to breathe a little bit easier, because that's where a lot of our housing supply and a lot of jobs come from. And I think that is going to be available. And we will see a strong rental sector continue. I do think we'll see a lot more reinvestment in small retail. And I think we're going to start to see some absorption of office, and maybe not a new office building, but at least some redevelopment of existing stock. I just want to urge people, if you're looking for some help on your property, if you're looking for some investments in real estate, please give us a call. We're here to help. Even if you don't invest with us, we'd love to talk to you and give us our 2 cents if that will help you. We don't mind giving some free advice. I just want to network with as many people as possible, find out what's going on. So please reach out. I definitely want to talk to you.